Good evening. This is Ken at Tortoise Capital. This is the portfolio periodic review for the Advanced Live Swing Trading course. It is the weekend of February 4th, 2018. Had some massive sell-offs after a beautiful month of gains in January. We had the big sell-offs this past week and the rise of volatility. So let's see what we got here. If you just quick notice the stack, the VXX up 13%, and the worst offender here, XIV down 10.5%. Alcoa, Chevron also suffering. All right, so let's take a look at Alcoa. Just a review. We started off middle of December with long entry in Alcoa, gain, a re-entry, 1 hour loss, stop and reverse. We're into this here. I'm going to move my stop down to the RL270. I should say my target on the downside is, I think, a closing of this gap. And let's put another one. I think this congestion zone here. And then the bottom. Apple, we were long. Had 3 days of gains. Ended up scratching. Probably should have stopped and reversed there. But we took this entry here short at 170 with a stop at 173, so $3. We're holding 161, so that's about 3R. I have moved my stop from a 2-day high here down halfway and just tracked that all the way down during the day on Friday. I will add, if this collapses, let's add a position. So we got 3R in hand with momentum. So we will should frame that as red. This was our day of entry here, and we will add a position there. AXP has had a nice run up. This pullback happened. We bought a this breakout here, 1, 2, 3. This is about a third of an hour loss. I will get short if it collapses below 96. Boeing had a gain with this much risk. Cashed. Bought the re-entry here with this much risk. Boeing is like the strongest stock in the Dow, so it didn't give back much. So I like this. I still like this entry, but I moved my stop up from here, just in here, to lock in some kind of gain. Caterpillar. This was a big winner for us earlier. We had the initial position, second position, cashed, re-entered, scratched, short. Let's put that as red. We're short from here. We're holding this. I'm going to bring my stop down to here. Cisco was long, cashed a 2-day low. I'm just stalking this one. If it finds support down around this Bollinger Band mean, I will look to get long again. I don't have a short program for that one yet. Chevron, we were long. And we're tracking this stop all the way through. Cashed this win. Stopped and reversed later that day with our initial risk right here above a 2-day high. And I'm going to bring my stop down. Oh, I'm sorry, this was our second entry. And I brought my stop down to here. And that will be a stop on both of those. So that's 2 positions in Chevron, and it just breached the RL270. and it just crossed over the zero line for a negative bias. And this thing has had a positive bias since all the way back here at the end of November. So I am thinking that we're had a positive bias right here. This is where I think it can get back to 113. And so I'm tempted to put a third position on, but we'll just keep two and then monitor that one. The diamonds had been the strongest of the indices. You can see just how long and strong that has been. Our recent play was long. We had framed this one up here. We were going to buy a second position. Never got it. We got the exit in here. And then at this collapse, this 1, 2, 3 collapse, we were short from like 260. And our initial risk was this red line here above the 2-day high. It wouldn't offend me if you were here for position sizing and then took this as a execution risk. That would not offend me. But we're 1 day into the gains, so I'm going to move my stop and lock in just above the Bollinger Band, and then my target on the downside is going to be this the RL270. So that's going to be our target. Devon Energy, long cashed, short into weakness in the energy sector, holding this one. So our initial risk was here, like a 2-day high, and so we're holding 1, 2, 3 R. We're going to add a second position if it breaches the low of the day. And I'm going to have my initial stop and my current stop working right there. DuPont. This is the Dow DuPont. This is one that, because of that merger, we weren't sure how to trade this one. Wish I had figured out how to trade that sooner. But that's collapsing along with the industrials and the basic materials. Emerging markets, we were long from here with an initial risk. We were going to add a second position here. It didn't materialize. That gap down was enough for us to cash. We got short on Friday on a collapse in the broad market, and I'm using like a 2-day high, a 1-day high essentially here inside that collapse, and we're going to move our stop to just above the RL270. Lock in some gains. The euro dollar, first position long, second position long when it breached the RL270. And we got the dip and then the resumption in the MACD histogram. This is still working. We're going to move our stop up to the PSAR. I'll add a third position here. Mexico, one position long with our initial risk here, cashed, and we just have been stalking this. This is a double top. If this fails below, this is where I'm going to pick up I will pick up a short position here if it breaks below this PSAR and this wick down in here, 52.29, and I'll put my initial stop above the hump of the dragon, and my targets on the downside would be I think the belly of the dragon. No, we'll say the Bollinger Band mean, belly of the dragon, belly of the next dragon. This is one where I will add a second position. Brazil, we had one long cashed re-entry with a very tight risk. We were going to add a second position here and never got it. We took the short in here. Initial risk above where we were going to get short before. Still okay here. We get the actual short position gets hit at the open on Friday. And so we're going to take that above the Bollinger Band 10. Initial target. The last place it found support. And then the RL 270. This is where we'll add a second position. General Electric. We were long. Took a half-hour loss. If it breaks below the red line at 1560, we'll get short inside here. Gold, we were long, cashed, got nothing, so just monitoring that one. Goldman, this is one we've just been watching with the financial sector. Hasn't been easy to play. Not sure how to play it. If I get short, it'll be in the XLF in the financial sector. But the financial sector was one of the stronger sectors in the Dow, so that may be a new relative strength leader. So no advantage in getting short in Goldman. All right, so Home Depot, one of our long-term winners. Initial position with this much risk. Second position, third position, fourth position. We got out on the gap down, just couldn't take the heat. Got short on Friday at the open, just under 200 with that much risk. My next target will be this, what used to be the entry, and that's where I'll add a second position. And then I think it can get all the way down here. This is one I'm going to play pretty close to the vest, though. I actually am gonna move my stop up, and only because it has been a relative strength leader. So I want to lock in a gain, like right above the RL, or right above the Bollinger Band 30. So I want to lock in some gains. IBM, tech leader, we were long, and then we were holding this one. We were going to add a second position, never materialized. The gap down got us. We did the re-entry here with this much risk and had a fractional win, call it a scratch, and then we got short at that moment with this much risk, and now we're holding this gain, and we've moved our stop down halfway down IBM. And my targets on the downside really is this all this congestion in here, and then the belly of the RL10. I'll add a second position if it breaches here. ILF is the strongest sector in the on all the big globals. So here's first position, cashed, re-entry, cashed. We were setting up a play to get long on another re-entry. It never materialized. It failed. Because this has been so strong, we didn't take that position on Friday. But I think it's one of those like emerging markets which, could fail. So I'm going to set up a short at 37.30. I'm going to use that much risk. I want to pick a 2-day high. So that looks like about $1, $2.50 of risk. And then I like this target and the secondary target. Intel, We were long, cashed. There was a favorable gap. We bought the opening on the gap, took a second position, then got an adverse gap, so this all scratches out. Took this short. We're holding this much of a gain. I'm going to move my stop down to here. So this was our initial. Whoops, excuse me. This was our initial risk right here, and so we're holding one. That'd be about 1.5 of gains right now. If it violates below this 45, that's where I will add a second position. Russell small caps. We were long, cashed a fractional win, re-entered for a scratch, got short the day after with this much initial risk. We're holding this much. I'm going to move my stop down a little more. If it violates below 152, all this congestion in the belly of the RL10 and breaks the RL270, that's where I get short. Second position, and then my target after that is here at 148.5, and I'll add a third position there. Real estate has been one of the weakest sectors, so we got short in this pocket, cashed, stopped and reversed on this MACD histogram reentry, had a fractional gain, stopped and reversed because of the weakness, because it didn't even get to the Bollinger Band mean. This is the pocket entry on the short side. Here's the second position, and this was the initial risk on that one. You can see it's the same risk. So I'm going to move my stop down here. That puts me probably around no lose on those two positions, if they both hit that. This should be red. Johnson & Johnson, long, cashed, re-entry, scratch, short on the collapse with initial risk, holding this, moving my stop down to here to lock in that gain. Excuse me. So we're short from inside here. Coke, we were long with this much risk on the PSAR, took the accelerated exit, got short on the collapse the next day with this much initial risk. We're holding this much, moving the stop to here. This is one that if it violates below the Bollinger Band mean, we'll try for one more day of short in Coke. And our stop and our target would be the belly, this congestion zone, all in here, and the previous Bollinger Band mean. If that violates, I will add a third position there, and my target after that would be the Z3 line and the bottom of this PSAR, and if it collapses through there, it's gone. So McDonald's, we were long with this much risk, cashed, or scratched, re-entered, stopped and reversed, so that's about a minus. Actually, that was one where we were setting it up and it never hit, and then we took what would have been the stop if that had gotten long now became the short, and then that has done nothing but collapse all week. And I need to move we're going to move that stop down to here. If it breaks through, that's like McDonald's and Coke, I guess. So I'm gonna let me put the my target is going to be this belly of the RL10, and we will add a second position if it collapses below the 2-day low. That's a real turning point in those two. Merck was long, cashed, stopped and reversed on the following day, so this was the exit, and the next day collapsed below the low that made a new low of the day, so we're short from in here. This much risk, holding 2. I'm going to move my stop down and lock in some gains just above the real body. I still like this as a target. Healthcare started to get weak this week also, and so I'm going to be prepared to add a second position if it violates below 58. Microsoft, we were long, second position. So this ended up giving back half of the gains from this first move. I don't have a position on this one yet, but I now am picking up a short side bias because we have the RLCO outside the river down here on the MACD histogram. So I'm going to set this up as a short. I'll use that much risk. So if we get a breakdown below 91.39, I'll get short. And then my target would be this previous entry and just below the, we'll say the RL270. It wouldn't surprise me if it got to the Bollinger Band mean and then hesitated. I would if it hesitates here, I'll cash that. But if it violates through, if it goes through there, I'll add. I will add it to 89.09 and then 87.41 also. Nike has been very, very strong. This was, but we missed all of this, and we tried to get on board. Got long here, took an R loss. I'm going to set this one up as a short here. If it violates that PSAR, and then I'll use that much risk. And target would be Bollinger Band mean, far side of the floodplain, far side of the river. I won't add until it gets below the RL270. Pfizer. We were long, added a second position, gap against us, then stop and revert. This pretty much, I think that erased those gains. That might have been a fractional win because of that adverse gap. Stop and reverse here. We're holding this much of a gain, and I'm going to move my stop down into here to lock in that much of a win. I think the target would be down here. At the, yeah, that's right, I like that target. Procter & Gamble has been great for us when healthcare started rolling over, so we got short. Took about a minus 0.7 loss. Gap down, got short. Actually, this was an entry, and then took an adverse 1R loss. Got short in here. Added a second short. Added a third short. So I feel like and this was our initial risk on that first position, and now the second position. And I'm going to move my stop down in here. So we're 3 bags full on this rascal. Okay, the Qs. We were long on this much initial risk. Going to add a second position. It didn't materialize, so we cashed. Got short in here on this RLCO and re-entering the river. So we're short from here on this much initial risk. And I'm going to move my stop to here. Again, the profits vaporize quicker on the short side. And with the whole market in the buy on dip condition, we've got to respect the fact that this could be seen as a buy on dip. And so we want to make sure that we lock in the gains from the short side. Schlumberger, long, second long, third long. That one scratched, but big gains on the first 2 on this much initial risk. Got long, scratched, stop and reverse here. So we're holding this much on this much risk. Energy has been weak, so if this violates through that Bollinger Band mean, this could be nice. Sorry, that should be red. That's where we'll add a second position, right here. And we'll keep that initial stop in place. Silver, we were long, had a fractional loss, got long, had about a minus 0.3. Completely missed this one, just poorly done. Spiders, long with this much risk, second position, cashed, short, that much risk. I'm gonna be intraday on this one. If it fails, I'm looking to really capitalize on the short side. So let's put that in as a second position. And I think it gets back. Whoops! It gets back to this congestion area, and then just below the RL 270. 270 is my target. Treasuries, you would think that treasuries would be working, but they're not. And so this is one where we saw that 1, 2, 3 entry, had a fractional win, tried to get short, scratched, and then just missed this one because treasuries were not making sense to me. Travelers, long from here with an initial risk of below the PSAR. Second position, and this is actually the second strongest in the Dow, so we're still in the double long position, but I've really tightened that up to like a 3-day low. I won't go short that one, but if it does get short, I see it getting back to the Bollinger Band mean. Excuse me, Bollinger Band mean. So still long travelers. Tesla was one where we were long and cashed. We got long with this much risk. In the weakness on Friday, we just scratched it because it was too vulnerable. Japan, we were short and cashed, and I'm just waiting for this to fail. If I get another day of failure in here, that would be a pocket entry, so I'm looking to get short Japan. And we would use this as a risk. So that will be our trade. That's the setup. Oil. Now we've been playing the energy and with Chevron and ExxonMobil. We said, well, let's just try it. It never really materialized from here. I am going to set up a short from here because this feels like a double top and the 10 has rolled over. This has re-entered the river. It's been a brilliant run up. Got 4 dots on the PSAR, so I'll get short at below 1293. United Tech, we were long, cashed. Try to get long a second time, minus 1R. I will I'll get short here if it makes a new low, and my target would be the Bollinger Band mean. So that's just one that got us. The VIX has been a good news story. This was that crossing the 0 line here, so we got long with a stop below the PSAR just by the numbers, so it was basically a $2 risk, and we're holding almost $4 of gain, so that's a 2R in hand. All I'm going to do is move my stop up and be careful. So if we get a market reversal, then that's going to collapse first, and then we would see all of those other shorts in the broad, broad indexes and the large caps. Those would all hit their stop losses on and lock in those short side gains, and then I would expect XIV to work. But if there's more pain on Monday, then I would expect this to have a gap up and go, and then I'll just be riding that train north. Verizon, we were long, cashed, re-entered, cashed, short, with this much risk, about $1, and that is that's when we're gonna. Our target would be the Bollinger Band main, but also the Z2 line, which is also the base of the PSAR. And so I'm going to move my stop into here. Walmart. We were long, we scratched. I'm going to set this up now on the long side and the short side. So we're just going to set that up in here. I'll take that in either direction. If it goes down, I'm expecting the Bollinger Band main and the RL270. On the upside, I expect that's the hump of the RL10, and that's where I would add a second position because now it's free and clear. Win has been just a payoff. It was a long side trade, cashed during this. This was the midday pain, you may recall, when Steve Wynn got accused of all the sexual harassments. So on an initial risk of, about $8, we get short at 193, and we're holding 27. So that's about 3R in hand. Here's the second entry, and our stop is just lock that one into the money. So we're double short on Win. I'd really like to see some more pain. And then I think it gets back to this base over here. U.S. Steel, one position long, two positions long, and 2-day low. Exit, stop and reverse, this much risk. I'm going to move my stop from here to lock this in. I'm going to add a second position if it breaks below there. And this is based on, we're going to see in a second, the breakdown in materials and XLI. So, and then I think the long-term play on that one is all the way back to the RL270. I could even see some support over here though, at the in that little doji, and that's a nice. That feels proper. XIV, we were long from 110, second position at 140, cashed at 143, short at 135. This was our initial risk up in here. So we're holding 1, 2. I'll let the VXX position be my volatility place. So I don't have too much to work on. But I think I'll add a second position short if it gets all the way back to 100. That's where I would be. I'm looking to buy again if it gets down around 110. XLB, one position long, cashed a 2-day low up in this after this beautiful run up. This was that nice extreme run up. See where the signal line came back into the river, and short here on the collapse. Second position, I will set up down here if it breaks any lower. And my target on that, if that breaks, is the base of this PSAR down in here. This is, I'll add a second position here, third position there. Energy has had a nice run up. That's next. One position long, two positions long. Got a fractional win on the second one, a nice win on the first one. Short, second position short. I'm now going to move my stop up to 73. Financials, long one, second position long, cash. And I want you, all of these caches were coinciding with that increased volatility from risk C, and caused, if you remember the last time we worked through this, was all the concerns about locking in those gains as risk C began to increase. I don't have a short on financials yet because it is the strongest sector. But if it does fail, then I would expect this to work. So this is where we'll pick up a short if that gets violated, and then my target would be Bollinger Band mean. Probably this looks like about Z1. That's Z2. Yeah, so Z1 is probably down here around the RL270, so that looks pretty good. Industrials, one position long, and that's initial risk. We were going to get a second position long here. It didn't fire. Cashed. Stop and reverse here. We're short from 78.52 with this much risk. Technology, first position long, second position long. Oh, I'm sorry, that was still high. Technology, XLK, first position long, second position long, cashed, and then short on the big collapse on Friday with this much risk above the first PSAR. And I think the downside target is the previous entry, bottom of the floodplain. Bottom of the floodplain is where I would add a second. Next one up is consumer staples. So we were long one, cashed about a 1R, got short on Friday, this much risk, price ladder. Utilities, this is just one I have a belief in. That has been such an enormous sell-off. I mean, this is like a generational sell-off. I just want to shoot out here real quick on the weeklies, so you can just see how big that sell-off has been. All of these, this sell-off from here all the way down to here is comparable to this one, and this one. And every one of those big sell-offs found a base and had a nice gain, base, nice gain, base. So that's the yield on it is about 3.5%. And so this was our last short and cover, and got long. There was a scratch in here, by the way. I got scared out of my own position. And then the more I thought about it, and that was an intraday scratch on Thursday. And the more I thought about it, and when I saw it stabilizing on the big sell-off day on Friday, I said, well, failure to fail is information. So I decided to start to re-enter my long side position. Talking myself into it. And on the upside, I'm looking at these price ladders back to the RL270. So we'll see how that goes. That's a longer term position trade based on a belief. Let's see, healthcare. We were long, second position, scratched the second position after a nice gain. Got short on the initial risk, then got 2 days in our favor. I'm going to move my stop to here, and if it violates this Bollinger Band mean, we'll add a second position. XLY, consumer discretionary, one position, two positions, three positions long. This one was a 1 hour loss. Stop and short. I like that one. We'll just leave that as such. First target, second target. This is where I would add this feels like where I need to add a second position at 101. Metals and mining, one position long, cashed a nice win, got short the next day on this initial risk, holding this one, moving my stop halfway down. target RL270. And then finally ExxonMobil. This is one that got away. I got it right on the short with its initial risk. I got chased out of it on Thursday, and couldn't get into it on Friday, and so that's the one that got away. That big adverse gap, and this was just too volatile intraday. There were other things just collapsing on Friday, so not in this one at all. So this is that closed. And on the trigger on that one caused me to miss that, and also take probably the worst possible exit I could get on that trade sequence. Okay, so there we are. Portfolio management for the week. See you in the chat room.